Hello traders and welcome to the Angels-Fx education session. Before I show you the strategy I have prepared for you today, I would like first to tell you a little bit about myself and what we are doing with my team. My name is Angels and I am head of trading in Angels-Fx. I was born in Bulgaria, a small but great country in Europe. For that reason, please take my apology for my English. I have a degree in finance and have been actively trading in the Forex and gold markets for over 5 years until now. During these years, I was able to gain a lot of experience, pay for my happiness with small losses at the markets, and to meet many great traders with which I spent a lot of time in learning and analyzing the markets. After I spent around 2 years at Angels Broker as CEO, I decided that I had gained enough experience and knowledge that I could pass on the other traders or to you. So I founded Angels-Fx and together with my team, we create an app to deliver our real trade position in the market as well as our analysis for major currency pairs. You can download our app at App Store and Google Play. Our app is named Angels-Fx. After many of our members write to us and ask me for education, me and my team decide to create AFX Masterclass, where I not only teach everything I know, but everything I learn in these days. How at the markets you need to continue on developing a new strategy and gain a new knowledge. Our members have the opportunity to go deeper in our trading instruments and strategy and to understand how to apply everything they learn thanks to AFX personal education session. We just get them in one Zoom call, and after that we explain or we answer every of our member question. We have instruments first, and then with our instruments we show our strategies to our members. But this is generally brief for me and what me and my team do. And now let's me move on the important part, the strategy I have prepared for you. Our strategy, which you will learn today, is called Angels-Fx Waves. This is a great strategy and very simple to learn and use in almost every market. I think this strategy is very profitable in Forex market, especially in Euro USD, Pound USD, and in the gold market, by the way. I prefer to use 1 hour or greater time frame, but you can test the strategy on the lower time frame too. Now, before we start, first please take our risk disclosure seriously. The teachings and presentation are only for information purpose. Please do not take that as trading advice. The results are not guaranteed, but I use this strategy very often in the beginning. After that, we have more professional strategies and instruments which help us to have better results. Now, let me continue and move forward to see what we have for you. First, this strategy is very good for short-term trading, which means 1 to 3 days, for swing trading and for day trading. Why I do not use this strategy for scalping? Because we have one indicator which lagging, and we cannot take the perfect entry. When you scalp, you need a perfect entry because you scalp for 6, 8 or 10 pips, and if you lose 2 or 3 pips, it's better to not scalp. For that reason, for me, this strategy is very good for short-term trading, swing trading, which is 1 to 2 weeks, or day trading, open at the London, close until closing in the New York trading session. Now, in this strategy, we will use several tools. This is what I tell you early, because first we learn how to use these tools, and after that we learn the strategy with these tools. Now in this case, we will learn to swing high, swing low. We will use indicator relative vigor index, and a Fibonacci. Now, I learned a lot of things from many books and from many people. I learned from ICT swing high and swing low, but I have struggled to use it like him. For that reason, I create our own version. We have something called AFX turning point. This is better tool than swing high and swing low, and it is part of our AFX masterclass. You can check it after that. Now I will show you what kind of things we will use and how we can apply that. First, we have how I said earlier, we have an indicator. This is a relative vigor index. You can see we will use period 9 for short-term trading and period 18 for long-term trading. This is very important because without using this data we can have a wrong signal. But we will not trade only one indicator. We will look for high probability trading, and we will have a combination of several tools to have a better entry, better risk reward, and better chance to win in this game. Now, we will use this indicator without fixed minimum. Why? Because we are traders and we want to see deeply the market, what the market do. For example, if a Great Britain pound USD go hardly up, aggressively up, and they crush high after high, we want to know that because we need to calculate the opportunity for short-term reversal or for breaking the trend. Then we will take a very big part of the move. But now we will use, and how I said earlier, relative vigor index levels. This is different from the periods, and we will look for 0.20. We will call this our premium zone, and we will look to sell in this zone. If the market are above this level, we start looking to sell. We will have a second level. The name is discount, and it will be minus 0.20. In this zone, we will look to buy. Think about something. If you want to buy a car, what price do you look to buy? If you have, for example, two Mercedes, and one of them is on a regular price, or that it's a premium price, and the other are on a discount price, it's sell off, you have 30% discount. They are almost the same, but in one you will pay the regular price, premium price, on at the other you will take it with 30% discount. I'm pretty sure you will buy this with a discount. On the other hand, if you sell something, if you look to sell something, you will look to sell this which is on the premium price, because you will have more profit from that, because the discount take part of your profit. This is a very simple rule to understand the premium and discount. We have an education session, premium and discount trading, and we explain more about this in our AFX masterclass. But let me continue now. We have an equilibrium, which means this is a 0.00. We do not expect anything there, but we can look for consolidation and building of liquidity. Now, this is the indicator, and let me show you how we can read it, or how me and my team read this index. First, when a green line is below the red line, we can expect a bearish move. You can see this here. We have a green line below the red line and the market move down. And second, when a green line is above the red line, like here, we can expect a bullish move. You can see a pretty good moves here and a lot of consistently in this indicator. Now let me go deeper, because this is not enough, but this is the first part of this tool. Again, when the green line is below the red line, we expect a bearish move, and when the green line are above red line, we expect a bullish move. After that, we need to read the levels. What I mean with that? First, when a green line is below red line, like here, and they are above equilibrium, which means above this level of 0.00, we have a 50% chance for bearish move, or that means if we look to take a trade here, we need to be very clear with ourselves, and we need to know we have only a 50% chance to win. Or that means, for example, if we take a 10 trade in this scenario, we will have 5 winning and 5 losing trades. On the other hand, if we have a green above the red line and they are below the equilibrium or this 0.00 level, we have a 50% chance for bullish move, the same like at the bearish move. We have only 50% chance, and in 10 trades we will expect 5 to be winning and 5 to be losing. Now, I know what you think. You do not want a strategy with 50% chance, but let me continue and let me now read the premium and discount level, and let me see how to use this high probability tool to expect very good move. First, when a green line is below the red line, like here, and they are above premium level, this is very important, above it, not below, but above when they turn bearish, we have 80% chance for bearish move, or that means in 10 trades we can expect 8 of them to be bearish, or the market to move lower, and only 2 to be against us. Now, you can see the market move very hardly from this zone and come down to the discount. What we can do, when the green line is above the red line and they are below the discount zone, this is very important, below when they turn against, and we can tell the market we have a 80% chance for bullish move, or that means if we look to trade, our goal need to be to take a trade at the premium when we turn bearish, or that means green line is below the red line, or to take a long orders at the discount after we turn bullish, or that means the green line is above the red line. You can see here at the equilibrium the market changed the direction, and we have 50%, how you know, to decline. Now you can see here at the end of this picture we have several times changed the direction, and that means we are at the consolidation. For that reason, I told you early we look only for premium and discount trading, but I will give you one example here for the equilibrium. And don't forget, nothing is sure in the trading. We need to trade with the probability, or what that means. For example, first, when you learn one strategy, you need to learn this strategy very good, part by part, step by step, and after that to apply it with your checklist or trading plan for at least 20 or 30 trades. After you do that, especially a demo at the beginning, you can look the results. For example, you have 20 trades with this strategy, but with the same condition. You save your checklist for every trade, and it needs to be the same for sell and the same for buy in the long run. After these 20 trades, you can look at your results. For example, if you have for 10 trades losing and 10 trades profit, for you it's very important what is the below the line, or what the risk reward give you. For example, if you risk 1% in every trade, the total percent you will risk is 20. You have 10 losing trades, which means you will lose 10% of your account. This is very big drawdown. But with another 10 trades, if you have, for example, risk reward ratio 1 to 2 or 1 to 3, you will have at least 20% return. At the end of this cycle, you will have 20% profit and 10% losses, and in the total net you will have 10% profit. Again, this is just a simple math for this trading strategy, and by the way, you need to think in this way for every strategy or every trading style you approach at the market. Don't forget, we look for high probability trading and for high risk reward trading, because at the end of the day we do not want to have a big drawdown and we want to have a consistently profit at the markets. Now let me move on and to see how and what is our other instruments to use. The next one is our Fibonacci levels. You can see here we will use AFX entry 2, which will be 0.710 for our first entry. Our third entry, or my second entry, is the best one, 0.790. This is great level. I make a lot of profits with that level and I really believe in it. You need to be you need to have a lot of patience to wait for this level, but your risk will be low and you will have a better risk reward ratio, which at the end of the day is important in our trading. Now, our AFX target 1 will be minus 0.27 and our AFX target 2 will be minus 0.62. You will see how you can use that later in this teaching. And our sweet and great target will be AFX target 3, which is just minus 1. Now, our first tool for entry will be swing high. We want this to see when we want to sell. Formation of 3 candles in which we will have candle 2 need to be higher than candle 1. We look only at the highs, and the candle 3 should have a lower high than candle 2. Now, many people will ask me, do they need to have a lower high than the 1? No, we do not care about this. Again, we have a better tool than this. It's called AFX Turning Point, and you can learn that if you are AFX member. But for now, just focus at this swing high. Again, after this formation, we will expect the change in the direction. In this case, we will look for lower prices, or we will be bearish looking to sell the market. Again, we need to have a high with a higher high, and then we need to have a lower high. It's very important, and it's very easy when you write just the numbers above. You will see at our example this tool, how we use it and how we mark it to be more easy for us. Now, at the other hand, when we look to buy or we are bullish, we will look for swing low, or this is again a formation of 3 candles in which we have a low with a lower low and higher low. But let me be clear, candle 2 should have a lower low than candle 1, and candle 3 should have a higher low. This is a must combination. If this spike down and after that close above, you do not care, you look the lows. You can take some kind of lines here to be sure, but at the end of the day, this is the strategy and this is the tool you need to use. And for that reason, if you apply this strategy, be very strict what you use and do you have swing low or swing high. Again, after this formation, we will expect a higher price and we will look to buy or to be bullish at the market. Now let me continue with the very simple examples. I want to show you that because it's very easy to learn with this example. You can find many more, but I want this first hour free teaching to be very easy and not so long, because people, I know your time is very important. I know you have a lot of jobs and other stuff, and for that reason we really look to teach people at the easy way without very complicated things. And think about that. At the end of the day, the markets are not so complicated, but we as a person create this complicated strategy things, tools and other stuff, and at the end of the day 90% of the traders lose their money because a lot of rules without consistently, without checklists, because they need to write 30 things and after that they forgot something of that, or they do not think that it's important. For that reason we manage to have some kind of simple strategy with simple tools and the simple combination to be very consistently in our trading, and you will see now why is that true for us. First, we need to mark a swing high because we look for lower prices. In this example we will use Great Britain Pound CHF 1 hour chart. Great Britain Pound CHF is very simple strategy, tool for trading, because it's high volatility. It's very important what is your spread. For that reason I tell you this is not good for scalping. But now let me look at this swing high. We have a high with a higher high and lower high. This form our strategy to be very easy for use, because you can see how easy it is to mark your tool. And now in this case we will look for lower prices, or we will turn bearish in this case. Now how we enter is other part. First, we can enter at the first move up in our swing high, or that means we can enter at this candle. But let me go deeper and to look what we expect at the markets and what we can do for this trading. Just give me a second to show you what I mean with that. First, we need to mark and swing low. Now I know it's very complicated to see this, but we have a swing low after our swing high. And now you can ask me, alright, but why we are bearish when we have a swing low after our swing high? We need to look for higher prices, right? But it's not just like that, and you will see why. Because we will use our relative vigor index level. Don't forget that. What it's tell to us now? We have a red line and green line, you can see here. And remember the condition. In this case the green line is below the red line. What that mean? Where we are? This is very important question, and you need to ask yourself before take any other trade. Before take trade, just ask you why, where we are, what we are expecting, what is the chance to be right, and what is our risk reward, where will be our stop, and where will be our target. This is very important question. You can write it down, you can simply stay with them, and you will see a lot of your losing trade will be not take by you, and you will not lose this money. Let me come back at the example. We have a green line is below red line. We have first swing high, you can see here. Then we have a swing low, and now what we will expect after the lines are above the premium. We have what? We have 80% chance for bearish move. In this case, do we will respect this swing low? No, we will not. We do not care about the swing low. We care about the swing high. But why we need this swing low? You will see now. What I tell you about the FIP. We will use a FIP from the swing high to the swing low. This gives us our range at the premium levels, or that means we can choose several prices to take a sell. And how I said earlier, if you are patient and if you have enough time to wait for AFX entry 3, For that reason we have pending orders. By the way, you do not need to wait, but whatever is it that we can sell at AFX entry 3, and we can put our stop above the swing high, and this will be the best risk reward ratio for us. But you can choose even early price to take a sell, because how you can see here, the market moved down below the premium and we have only 50% chance for winning. Now you will say, all right, but if I sell early and then price go up, sometimes you will have this drawdown. But don't forget, this is short-term trading. You need to close your order after 8 or 10 hours. You can use even that for swing trading, and you can see that in this example too. Now, where we will take a trade, in this case I like to take AFX entry 3. What other you can wait? You can wait this swing high to be formed again. Yeah, you will have only 50% chance, but you can take this trade in this case. And you can see now what the market will do. We put our stop above to be sure. Our first target will be below this low. You will see that, and we will have a risk reward 1 to 3 here. Now let me come back one step, and can we look here at this price action, because it's very important to see that. First, here we have a swing low, but we are above the equilibrium. We do not look at that. Every new swing high gives us a 50% chance to take a good trade with high risk reward ratio. Now, our first entry will be here at this candle, because it's still above the premium. You can see here. And our second entry can be after this swing high before. You can see the market go above it. You can put your stop above still, but you can put your stop here and to be stop it out. This is 50-50 chance. For that reason I like to use this measure swing high. This is my range, and my stop will be above here, and my first target can be below this swing low. After that we have a new swing high where we can take a trade too. We have another 50% chance for winning. Here we have a new swing high, you can see it here, but we are below the equilibrium. I cannot take this trade even if I want, because it's not confirmed my condition. I will like to sell above the premium with 80% chance, or to sell above the equilibrium here with my 50% chance, but the green line need to be below the red line. In this case, in this candle, I cannot sell. I can sell in this candle. Now let me back again to the risk reward ratio. In this case you can see the very next day we achieve 1 to 3 risk reward and 1 to 4 at the beginning of the London close. And in this case, if you risk 1%, you will make 3% at the first target, or you can make 4% at the second target. After that you close your trade and you just wait. Now let me look at this example here, because it's very pretty easy to see that you can see the market turn bullish. In this case we have a swing low here and we have a swing high here. You can buy here, but you can see we are above the equilibrium. You cannot take the trade. For that reason I tell you, just stay with the rules. Now you will say, can I buy after this swing high? No, because it's the same like swing low. Here we do not have any swing high before this one here. We have a swing high here and the market moved back, but we are at above the equilibrium, even go above the premium price, and for that reason I do not want to take any trade. The second rule is we need to take a trade with our trading zones or trading time. You can see we are now not in London session, not in New York session. Why we will take that trade? I just will sleep maybe. But For now, let me look at one sell example. One buy example. This is a bullish example, and here you can see how we can use even 50% chance and you can still manage to make some profits. First, we need to mark a swing low. In this case, we will use the numbers. We have a low with a lower low and higher low. This is our turning point, and we wait. This is our swing low, and we will expect the turning in the market direction. We will expect the higher prices and we turn bullish. Then we need to have a swing high. You can see the swing high is here. We have a high with a higher high and lower high here, and after that what we will expect, not the turning point, not to look for lower prices, because why? Because we are below the equilibrium. You can see here it's 5 o'clock 14th of October, and we will not look for lower prices. But what we will do, we will use our relative vigor index level. We look for our red and green line. In this case, the green line is above the red line the whole move, and what that tells us, we are above the discount, but at the beginning we are below the discount level. What that tell you? We have 80% chance to have a bullish move. But the important here is, alright, the swing low is below the discount, but it's very important our level to be below, our entry, to be below the discount range. You can see again here, we will use a fib from the swing low to the swing high. Now, when we use a swing low to the swing high with fib, we have again several discount price with which we want to take a long order, we want to buy, and after that we want to stay with our trade. But again, the entry is very important. Please take that in mind. In this case, we will take a trade in this candle. You can see here we forming some kind of swing low. It's not important for me that. For me, it's important that I want to buy when we are below the equilibrium. Below that, this is just not beginning here. We are still not here. But when the market move down, I will take this trade with 50% chance if I like the risk-reward ratio. In this case, I like it because this is very small range, again in Great Britain pound CHF at 1 hour chart, and this is during the New York close. We can expect very small move after that, and I can just even scalp that. I can close at the very next candles if I do not believe in that. But you will see now after the green line is still above the red line, we are still bullish, and again we need to be below the equilibrium. Even you can take a buy here, I will not. You can take buy here, I will not again, because still our swing high is not formed. We need to wait the very next candle. It's go down, it's still below. You can see maybe the green line is cross above, but it's a matter of minutes, because you can see the 6 o'clock is here and this is a green line here, but whatever is it, I will take a long order here. I will expect a 50% chance to be bullish, and my stop will be below this swing low. My risk is defined. I expect 50% of this situation to be losing for me. For that reason, I need to look for very greater risk-reward ratio and very fast and good move to take profit. Now, you can see the market just crushed the levels. First, let me go step by step. You can see the market go above the equilibrium and they never come back in the short term. You can see what the market do. They consolidate during the Asia, they consolidate again, and after that at the London Open they spike up and we achieve 3.5 reward for our risk, which means if we risk 1% here, we will have 3.5% return. After that, you can see the market come back and again consolidate. You can see here we have again a swing low, but we are at the premium price. I will not look to buy, even I will put my stop at break even, or I will take a partial profit. But in this case, we can expect a lower prices, because first we have a swing high, here we have a swing low. After that, you can see the market retrace up and come back again. Here we have only 50% chance, and you can see in this case you will take a loss. But don't forget, we buy before that, and we will not look to sell. We can look just to close our trade and just wait. This is 3.5% profit. You need only one of these trades per week. If you look for even for 10%, you need this trade around three times per month. But in this case, let me say we will have one per week. In this case, we will make 14% per month. Many traders cannot make 14% per month consistently. For that reason, take this strategy very seriously. Now, when we talk about the target 2, if we wait, if you have some kind of our position, stay in it, it will be 1 to 5 risk reward with our original entry. And the simple rule tells us you can close your trade when the green line is below the red line and it's above the premium prices, and you have a swing high. Here in this case, where that it's true, we do not have a swing high. When we have a swing high, the market turn again bullish and we are below the premium. And now you can see the market go again up, and you have the reason to stay in this market. For that reason, do not take fast your take profit. You can take a partial profit, but stay in the trade, because you can achieve 1 to 6.5% profit. But again, this strategy is very simple. You can write the checklist. I like the checklist for entry. In this case, you will have: do I have a swing low? Do I have a swing high? Where is the market related to our vigor index? It's at the discount, at the equilibrium, or in this case below the equilibrium? It's above the equilibrium or above the premium? And after that, you need to create the condition which we show you. I mean, first you need to have a swing high and swing low. Then the important thing is, when you look to buy, to be below the discount for 80% chance, or below the equilibrium for 50% chance, and green line to be above the red line. When you look to sell, you need a swing high with a swing low, and for you it's very important to be above the premium price when you enter in the position. Again, when you enter, not when it's formed, but when you enter. This gives you 80% chance to be right if the red line is below the green line, and if they are above the equilibrium, you have a 50% chance for good call. In this case, we use FIP for entry because we need to choose the correct entry. I use only entry 2 and entry 3. I do not use 62 or 50% for entry, and I look to take my first partial profit at AFX target 1 or AFX target 2. With that, guys and girls, this is our first free strategy for you. I hope it will help you. If you have any question, please send to us your question at support@Angels-Fx.com. You can visit our website at Angels-Fx.com. We have Facebook page, we have Twitter account. You can look in our Instagram picture with our results. And it's something very important because Christmas coming, and we have very big present for you. We give you a 30% discount from our AFX Masterclass. You can take that with our promo code, which you can see on your screen. Please hurry up because we have a limited course packages. For now, you can take our AFX Masterclass. You can learn our other professional trading instruments and strategy. You can look our result at our AFX page, or in our website, in our Facebook page, in our Twitter. And by the way, you can take our free signals, free Forex signals with our app. You just need to download the app at your iPhone or at your Android telephone, and you can use it free without paying anything. You can buy entire analysis for only $90 per month. With that, I want to wish you a nice holiday and a nice Christmas days. And again, if you have any questions, suggestion, or other things, you can write to us at support@Angels-Fx.com.